Hello and welcome to Money Minds, a series dedicated to empowering you with robust knowledge about the fascinating world of investing. We believe in making complex financial concepts easy and engaging for everyone, whether you're a budding investor or a seasoned pro. Our mission? To help you understand and navigate the world of investing so that you can make informed decisions and grow your wealth. Today, we're diving into a captivating topic, the millionaire mindset. What does it take to become a millionaire through investing? How do you start? What strategies should you follow? Stay tuned as we unravel these questions and more, guiding you on a journey to financial prosperity. Welcome to the world of the millionaire investor. Have you ever wondered what it takes to become a millionaire through investing? It's a question that sparks curiosity in many of us. The answer to this million-dollar question is a fascinating journey. A journey that starts with your first investment and culminates at the coveted million-dollar mark. It's a tale of strategy, persistence, and financial acumen. So buckle up and get ready for a deep dive into the world of investing. In this video, we'll explore the path to becoming a millionaire investor. Every journey starts with a single step, and in investing, that first step is your initial investment. This initial investment, no matter how small or large, is the genesis of your financial journey, the first brick in the construction of your financial empire. The first investment carries a lot of weight. It's like taking your first step into an unfamiliar terrain. You're unaware of the challenges ahead, but you're filled with a sense of hope and determination. It's a mix of excitement and apprehension as you venture into the world of finance, carrying with you the hopes of financial freedom and prosperity. This first investment is incredibly significant because it introduces you to the concept of risk and reward. Every investment comes with a certain level of risk, but it also carries the potential for great reward. It's a delicate balance, a seesaw that sways back and forth, and your job as an investor is to find that sweet spot where the potential reward outweighs the risk. But don't be daunted. This is where the importance of thorough research comes in. Before diving in, you need to study the market, understand the trends, and evaluate the potential of your chosen investment. This initial research will not only help you make an informed decision, but also equip you with the knowledge and skills needed for your future investments. As an investor, your first investment is your first real taste of the financial market. It's your first encounter with the dynamics of supply and demand, the ebb and flow of the market, and the thrill of seeing your money grow. It's your first glimpse into the world of investing, and it's an experience that will shape your investing habits and strategies for years to come. So, when you're ready to make your first investment, take a moment to reflect on its importance. Consider the risk, the potential reward, and the research you've done. Then, with a clear mind and a focused goal, take that first step into the world of investing. Remember, your first investment sets the tone for your investing journey. It's the first step in your quest for financial freedom and the start of your journey towards becoming a millionaire investor. When it comes to growing your wealth, one strategy stands above the rest: compounding. Imagine you're planting a tree. The seed you plant is your initial investment. As time passes, your tree grows, producing fruits. These fruits represent the returns on your investment. Now, instead of enjoying all the fruits immediately, you decide to plant some of them, creating more trees. In turn, these new trees also produce fruits. This is the essence of compounding. Your earnings generate even more earnings. Let's simplify it further. Assume you invest $100 at an annual interest rate of 10%. After a year, you'll have $110. That extra $10 is your return on investment. But here's where compounding gets exciting. If you leave your money, including the interest earned, in the investment for another year, you'll earn interest not just on the original $100, but also on the $10 you earned in the first year. As a result, at the end of the second year, you'll have $121. This might seem like a small increase, but imagine the impact over 20, 30, or 40 years. Compounding is like a snowball rolling down a hill. It starts small, but as it continues to roll, it picks up more snow, growing larger and faster. This is why time is a crucial factor in compounding. The longer you keep your investments, the more time they have to grow. However, it's important to remember that compounding works best when you reinvest your earnings. It's tempting to spend your returns, but if you want your wealth to grow exponentially, you need to let your earnings generate more earnings. In essence, compounding is a powerful strategy that can significantly increase your wealth over time. It's not a get-rich-quick scheme, but a disciplined approach to investing. It's about understanding the potential of your investments and giving them time to mature. Harness the power of compounding to accelerate your journey to the million-dollar mark. As an investor, it's crucial to understand the relationship between risk and reward. Now imagine yourself at a buffet. You wouldn't want to fill your plate with just one type of food, right? You'd want a variety, a balance of flavors. In the world of investing, this concept translates to diversification. Diversification is the practice of spreading your investments across different types of assets to reduce risk. It's not putting all your eggs in one basket. Instead, it's spreading them out across different baskets, or in this case, different asset classes. These could include stocks, bonds, real estate, and even commodities. Why diversify, you might ask? Well, each asset class has its own cycle of ups and downs. When one class is down, another might be up. By diversifying, you're not relying on the success of a single asset. Instead, you're spreading the risk, and in turn, potentially increasing your overall returns. But diversification isn't just about spreading investments across different asset classes. It's also about investing in different industries within those classes. Think about it. If you invest all your money in tech stocks, and the tech industry takes a hit, your portfolio would also suffer. But if you had also invested in healthcare, consumer goods, or utilities, those investments could potentially soften the blow. And let's not forget geographic diversification. Different regions around the world have different economic cycles. Investing in a mix of domestic and international stocks can help further balance your portfolio. So, how does one diversify? Start by understanding your risk tolerance and investment goals. Then, allocate your investments across different asset classes, industries, and regions based on these factors. Remember, diversification isn't a one-time thing. It's a strategy that should be reviewed and adjusted as market conditions and personal circumstances change. By diversifying your investments, you can better manage risk and pave the way to your financial goal. It's a key step on your journey to that coveted $1 million mark. So go ahead, mix up that investment buffet. Your future self will thank you. Investing is not a get-rich-quick scheme, it's a long-term game. It's a mantra repeated by successful investors worldwide. But what does it mean, and why is it so crucial to your journey toward the coveted $1 million milestone? You see, the heart of investing lies in the art of patience. When you plant a seed, you don't expect a tree the next day, do you? It's the same with investing. Your investments, like seeds, need time to grow, to flourish, and so the key is to give them that time. Consider the stock market, a roller coaster ride of ups and downs. When the market dips, it might seem like the sky is falling, but seasoned investors know better. They understand that these downturns are temporary. They resist the urge to sell, knowing that in the long run, the market always trends upward, so they stay invested, letting their money work for them day in, day out. But why is this long-term vision so important? Well, it's because of a little something called compound interest. Think of it as the snowball effect. Your money grows not just from your initial investment, but also from the earnings on your earnings. And the longer you stay invested, the bigger your snowball gets. This is not to say that long-term investing is a walk in the park. There will be challenges, there will be setbacks. But remember, investing is not a sprint, it's a marathon. It requires perseverance, commitment, and above all, vision. The vision to see beyond the immediate, beyond the here and now. The vision to imagine what could be, what will be, if you just stay the course. So as you journey toward that $1 million goal, remember this: investing is a long-term game. Embrace it. Stay patient, stay committed, and above all, stay invested, because the road to $1 million isn't paved with impulsive decisions, but with the steady, unwavering vision of a long-term investor. Keep your eyes on the prize and stay invested for the long haul. So, what does it take to become a millionaire investor? Well, we've covered quite a journey today. We started at the very beginning, with that crucial first investment. Remember, it doesn't have to be a giant leap. A small step into the world of investing can set you on the path to financial success. Then, we discovered the magic of compounding, a powerful force that accelerates your wealth growth exponentially over time. It's like a snowball rolling down a hill, gathering more snow and momentum as it goes, becoming bigger and faster with each passing second. We also talked about diversification and risk management. In the unpredictable world of investing, Spreading your assets across a variety of investments can help you weather the storms and keep your portfolio growing steadily. It's like the old saying goes, don't put all your eggs in one basket. And of course, we discussed the importance of having a long-term vision. Investing is not a sprint, it's a marathon. It requires patience, discipline, and a clear vision of where you want to be. All these elements come together to form what we call the millionaire mindset. It's not just about the strategies and tactics, it's about the mindset, the attitude, the determination to reach that prestigious milestone of $1 million. Adopt the millionaire mindset, stay focused, and you too can join the ranks of the successful investors. Thank you for joining us on this enlightening journey through the world of investing and the millionaire mindset. Let's quickly recap the key points we've discussed. We started with that all-important first investment, moved on to the magic of compounding, explored the necessity of diversification and risk management, and underscored the importance of a long-term vision. All these elements amalgamate into what we call the millionaire mindset, a mindset that can set you on the path to financial success. If you've been hesitating to start your investing journey, remember, every millionaire investor started somewhere. It's never too late or too early to start. And remember, it's not about making a quick buck, but about creating sustainable wealth over time. So set your sights on that $1 million milestone, adopt the millionaire mindset, and start your journey. If you found this video helpful and want to learn more about investing, don't forget to subscribe to Money Minds. We bring you insightful content to help you make smarter financial decisions. See you in the next video.